Hello there, my friends. Chris Marcus here with you on Wednesday, October 4th, on behalf of Arcadia Economics. We're in the backyard today to give you a little scenery and present a quick video about the upcoming Fed chairperson nomination. The majority of the talk has focused on a fellow named Kevin Warsh, who seems to be the most likely winner, I guess if you would call it, for the next Fed president. I don't know if that's something one really wins or not. Again, I'm guessing most people aren't familiar with Kevin Warsh, at least among the public. Although within the gold and silver community, he's a bit well known because a bunch of years ago he wrote this letter where he inadvertently, or maybe advertently, referenced some of the gold swaps and basically manipulation in the gold market that the central banks get involved with. So, again, without trying to be cynical or skeptical here, for better or worse, seems a continuation of what we've been seeing and would fit right in. Although there was an interesting article today on CNBC, or maybe it came out yesterday, but in either case, bond king Jeffrey Gundlach, who is the manager of $109 billion, that's a few, so big bond manager, and Jeffrey is saying that he has a bit of a dark horse pick where he thinks Neil Kashkari might instead be the next Fed chairman. You may have heard of Neil before. He was a central figure in that TARP bailout back in, I think that was either 2007 or 2008, where there was $700 billion that went to the banks. So again, another guy that's fit into the system, been a cog in this monster for years now. And it's interesting to see why Jeffrey Gundlach thinks that Kashkari might be the next Federal Reserve. And wait till you hear this one. Basically, he happens to be the most easy money guy that's in the Federal Reserve System today, and that's why he may win. So essentially, a large bond manager is saying that he believes Kashkari will be picked because he's most likely to print money. Jeff goes on to say, Gundlach says that Trump needs someone who will keep rates low in order to keep his populist reputation and help his base voters, and that's why he'll pick Kashkari, a stronger dollar, because a stronger dollar is not good for achieving that agenda. Translation, again, this is Gundlach's opinion, although certainly seems plausible enough to me that Trump would be more likely to pick someone who's going to keep interest rates low, cheap money flowing, essentially keep fueling the bubbles. Because remember, at the end of the day, so much of these record stock, bond, and real estate levels are based on low interest rates, printed money, and if you take that away, again, you'd have something similar to what happened when Alan Greenspan started raising rates in 2004, and all those mortgages and derivatives that were based primarily on never-ending low interest rates, eventually, as rates went up, the payments went up, and a lot of the debt was insolvent. So similar dynamic here, which is why essentially for the last 8 or 9 years I've been saying that I'll believe the higher rates when I see it. Keep in mind I guess they started lowering rates down to zero in 2008, 2009. We're here in 2017. And while the world's been given the impression that the Fed's doing some massive normalization, here we are, interest rates are 1% now. So it's been raised 1% over 8 years. And now some of our wiser investors saying, here it is, whether Kashkari or Warsh becomes the next guy, still the implication that they're going to pick someone who are going to keep rates low. Translation, print more money to keep the bubbles fueled rather than acknowledging that there's an issue here and doing something responsible about it. So we'll keep you posted on how that goes, but again, the one thing you can probably count on is more printed money out of the Fed. That's why I like owning gold and silver. And I'd love to hear what you think about that, so leave your comments below, and we will see you again tomorrow. Thanks.